increased sales for our corn and our soybean market.
Hi, everybody. Welcome back to the Comstock Channel. I'm Marlin Bohling with you. Glad to have you with us as we continue to dive into the world of agriculture, ag markets, ag news, all ag topics. I've got with me today Chad Hart. Well, he's an economist, an ag economist with Iowa State University, and we chat once in a while about what's going on. And I wanted to get an update from you, Chad, for one thing. Now that we're coming down the tail end of harvest, at least I assume you probably are in that area there. Can you get a feel from the people in your part of the country there, how they came out on crop yields and what we're looking at for farm income this year? Because from what I understand, Chad, your state is kind of divided on the west half and the east half this year.
It's a sort of northwest southeast. I'll describe it as sort of more diagonal as well. Because what we found is that overall, we are looking at a record crop here within the state of Iowa. We did see some incredibly strong yields through the central and eastern parts of the state, especially as you move towards the southeast and towards central Illinois. Where we found our biggest problems were the places we already knew at the beginning of the year because we had the flooding in northwest Iowa early on. And that just put those farmers up there behind the eight ball. But there wasn't enough damage in the northwest part of the state to pull down the state or national totals all that much. And so when you're looking at the estimates that USDA currently has for Iowa, we're looking at a record corn crop averaging 213 bushels per acre. Soybeans, not quite a record, but pretty close at 61. So it was a very strong production year. The challenge, though, is when you have strong production years, you tend to have lighter prices, which is exactly what we've got right now.
Yeah, I'm sure you probably are fielding all kinds of comments, let's be nice, comments from producers out there about the way the market is. But I guess you have to admit that if we really do have that kind of a yield, it does kind of justify those prices for the time being, doesn't it?
It definitely does. And in fact, I would say that's been our issue for the past couple of years. We've been able to overproduce for what is actually a really good market. When you're looking at corn and soybean usage, they have been growing over the past couple of years. In fact, corn side, we're at record usage right now. It's just the problem is we have so much supply on hand that we're able to not only meet those demands out there, we're able to put a little into the savings account into stocks, and that's what tends to definitely lower prices.
Where does that put our farmers in their financial standing right now compared to average? Did we slip quite a bit this year?
We have slipped quite a bit. And I guess part of the problem is that we're comparing to our recent past. And when you look back at 2021, 2022, those were incredibly strong farm income years. In fact, 2022 was likely the biggest we've ever seen for, nationwide. So coming down off that high, we've slipped back down to average, but it feels so much worse because we were just at those record levels a couple of years ago.
Now, if that's the case, that makes it especially hard for anybody who's maybe just starting out the last year or two.
It definitely does, because while our prices and revenues have slipped, our costs have not moved quite that much yet. And so we're still seeing elevated costs. We're seeing a lack of profitability across agriculture right now, even with average revenues coming in. And that does put a lot of financial stress, especially as we look at our young beginning farmers or those that have been actively growing over the past couple of years. They probably got themselves fairly leveraged, and now there's just not the income coming in to help support that debt.
So do you think there was a lot of contracting before harvest for maybe forward pricing, let's say for delivery after the first of the year or something like that? Was that pretty commonplace this year, or do you think that they tended to pull income into this year since it might be kind of short?
I think we did see folks not forward contract as much as we would hope. At the same time, too, I think that a lot of them have had to make some sales here at harvest time that weren't as optimal as they could have been. And that's also putting some stress when we're looking at the finances on the farm. You think back to, late spring, early summer, we did see some better prices there, but I think there was this opportunity that farmers thought that we could see those prices continue to rise throughout the summer. That did not materialize, and I think that caught a lot of farmers and put them sort of behind the eight ball within their marketing as we look at this year's crops.
So, do you think this might be a case where some farmers will be able to use income averaging on their taxes?
I think they definitely will be doing that. I think we'll also see a lot of storage being utilized to try to help hold on to the crop and hopefully maybe look at that seasonal rebound next spring to try to take advantage of some better pricing out there. But that's again, it's hoping that we'll continue to see recovery in prices as we move forward.
Now, speaking of that, I'm glad you brought that up. From what I hear in Northwest Iowa, storage is not much of an issue. However, in other parts of the country, a lot of grain on the ground, and the river systems have been pretty low, and that seems to be reflected in basis levels too around the country. Boy, it seems to really vary from one location to the next, and they're not very far away.
It definitely does vary, and it's a combination of factors. As you mentioned, the rivers are low, so we're not able to move as much down the river as we would like. We're also seeing actually an uptick in export demand right now that's putting additional stress on that system to load those barges as full as we possibly can, even though, physically we can't do much beyond that. And I think you're also seeing, let's call it a rebalancing of basis across the nation to pull the crop where we need it to go right now. As you mentioned, the idea is as we look in Northwest Iowa and towards the Great Plains, we're going to have some areas that, don't have as much crop on hand as they would like to see. And their basis is going to reflect that. They're going to see stronger basis out there, and it's going to attract some crop to move that way. At the same time, too, when we're looking at central Illinois, southeastern Iowa, that's looking to that export market to really take this big crop on, if you can't move it down the river, it's really hard to take advantage of those export markets.
Okay, Chad, the election is now over, finally, thankfully, for a lot of viewpoints. So anyway, now that it's passed, we have a little work to do. We still don't have a farm bill. Some folks are still waiting on the, what do you call it, 45Z regulations to come out from the Treasury Department, and just all sorts of stuff still kind of hanging out there unresolved. And now we're going to be looking at a new Congress as well. How much does that impact the future of ag when it comes to profitability moving into next year now?
Argue short run doesn't change much. As I'm looking, let's call it midterm, 12 to 18 months. Then's when I think it really matters here. As I'm looking at the farm bill, my own sense is that we're going to do what we did last year. Or we're going to see the lame duck session pass a one-year extension to buy that new Congress some time to actually sit down and craft an updated farm bill, which I think we will get next year. Because we've kicked the can down the road now 2 years. There won't be the election pressure on this upcoming Congress, and that usually is a good opening for a more hearty discussion of agricultural policy. You mentioned 45Z. I think that is one of the bigger question marks as we look at that next 12 to 18 months. The idea is that was sort of set up underneath, this administration currently with the Biden administration. How will President-elect Trump approach that as we look forward, and what does that look like for us? I think is a big question mark as we look out over the next few years, because the change in administration does mean a change in the direction, especially when it comes to climate policies looking forward.
Now, what about the demand situation here? There's a lot of talk about possible tariffs once again. How did that affect Iowa, for example, last time we went through that?
Well, when you think about tariffs, I'm going to argue agriculture usually does take a pounding. When tariffs are put in place, ag is one of the first targets that other countries leverage to, if you will, retaliate with tariffs against us. And we'll likely see that again if President-elect Trump does carry forward with the idea of tariffs sort of across the board. when you think back to the last time this happened, which would have been about 7 years ago, we did see some sizable losses in farm income here in the state of Iowa due to the loss of those export markets. And we'll likely face that again. I think the challenges now are that in the previous go round, it was realistically just a tariff fight with one country, that being China. As we're looking forward, the question is, does it become broader than that? The president-elect has mentioned sort of attacking imports across the board. That means many more countries could be looking at tariff policy changing fast, and that could have a stronger detrimental impact to Iowa and U.S. agriculture.
So that leads me to my next question, and it's kind of a double-pronged question here. But are you picking up anything on what the trends are for input prices as we get ready for next year, like fertilizer or chemical pricing, seed pricing, that sort of thing? And not only that, we have this kind of a wild card hanging out there, if you will, because we still have a longshoreman strike that's threatened for January.
Yes.
But we haven't totally settled that deal either yet. Now, they kind of go hand in glove, don't they? I just wonder what you're hearing in that regard.
They do, but I think, we've also moved forward a lot of our purchases of inputs than they were, say, 10 years ago. So we're locking in more of those input costs now as opposed to waiting to the springtime. And that's helping alleviate some of the concerns as we're looking forward. I think as we look at cost in general, I'm going to guess right now that our cost would be on par with what we saw last spring. But that doesn't mean everything stayed flat. I think you're going to see some places like fertilizer has come down over the past couple of years. We continue to see fuel costs are relatively moderate. But at the same time, too, you're facing higher interest costs than you did a couple of years ago. You've seen wage increases there. And so I think when we look on balance, when we add everything up, a few categories up, a few categories down, but mainly cost flat as we're looking out there, which, is not necessarily good, but at least it's not showing any sizable increases given where prices are right now.
So if I read between your lines here, it sounds like you're telling me it's going to be hard to break even next year again.
I think it will be hard to break even next year again. I think we might have some windows of opportunity. For example, if we look back at this year, I mentioned that May, June timeframe, that did offer up some pricing, that did make some profits, but it disappeared fairly quickly as we got into the heart of July. I think we could see another period of opportunity like that in 2025. But again, it's going to be fairly fleeting, and we'll need to be ready to take advantage of it if it comes about.
Absolutely. Absolutely. All right. Well, I encourage everybody to stay in close touch with their financial advisor and their tax preparer. And maybe some things need to be adjusted before we get to the end of the year. It's not that far away anymore. Like you said a little bit ago, maybe income averaging might be a tool to be looking at this year. Great stuff. Chad, anything else you want to mention to everybody before I let you go?
Well, I think the other thing I'm going to be watching, especially over, let's say, the next 2-3 months, is that, we've talked about tariffs and exports. One of the things that is a spark right now that I think is going well for U.S. agriculture is that we've seen the export pace pick up. We are seeing increased sales for our corn and our soybean markets. And if we can continue that sort of rally, it does lead to, thoughts that we could see strengthening prices as we go through the winter into the springtime. Again, making more likely that opportunity in the late spring to maybe get back to profitability.
Fingers crossed. Chad, I wish you well. Thank you for all the time. And I always look forward to talking with you. Chad Hart of Iowa State University with us here today. That'll do it for this episode. For producer Brianne Hendrickson, I'm Marlin Bohling. We'll catch you next time right here on the Comstock Channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.